Let's talk about what happened this week with the $307 million package, which was announced ahead of the upcoming budget for the ACT. It included $150 million in funds for sustainable households. So what does this include?
Yeah, so it does include loans of up to $15,000 for people to make their homes more sustainable. So that can include things such as solar panels and batteries that you can put within your home. It also includes quite a bit of money for bigger batteries that can supply larger areas. And then the third one, which relates to affordable and social housing, is really trying to make those more sustainable by adding elements, again, such as solar batteries and solar panels. It is a big move by the ACT government, but it does reflect what's happening more broadly across Australia, that there is this growing interest in sustainability. One of the really interesting trends that we've seen on realestate.com.au is that the trend, that the keyword off-grid has actually increased by almost doubled over the past 12 months. So, people are really looking for these sustainable elements.
Yeah, very interesting. In 2020, Nerida, we saw some surprising increased prices for residential real estate. Where were some of the biggest standouts?
The really big standout on a smaller area was the Central Coast. So when we have a look across Australia, we did see year-on-year price growth in every capital city. The area that did top the list was the ACT, but when we look at a smaller area, we found that the Central Coast was the top performer. So what we saw on the Central Coast was some incredible price growth. We now have $6 million plus suburbs in that area. We are expecting to see another 3 this year. The areas that are seeing very strong growth do tend to be beachside. It's places like Copacabana, North Avoca, Pearl Beach, and those areas saw over 40% price growth. So quite incredible achievements, given that we were in the middle of a pandemic at that time and also in the middle of a recession.
Certainly unexpected by many people. Do you think these areas will hold their value when we can perhaps start travelling overseas again and people are able to travel outside their own states, and the possibility of, booking for holidays changing in different areas?
Yeah, look, it won't. Look, I don't think the rate of growth will continue at that rapid pace. I mean, to achieve that sort of price growth over a 12-month period is quite incredible, and it doesn't typically go on to achieve it the following year. I do think it will hold value. I think one of the things that will happen this year is a lot of people will be called back into the office, and so that has led to very strong demand for places that are quite far from capital cities, and people have been able to move there because they didn't have to commute to work. The future of work is still very uncertain, but at some stage, we're likely to be working maybe 2 or 3 days in the office instead of 5, and it does open up places like Central Coast, which is commutable from Sydney, but is quite a long commute, which may not be manageable 5 days a week, but 2 or 3 days a week, a lot of people would be able to handle it.
And in terms of commercial property, what's the latest there?
Yeah, look, commercial property from an investor demand perspective is doing incredibly well. There was a survey that was released last week by a group of industry bodies representing pension funds and institutional investors. And what they found was that in terms of buyer activity, a lot of these bigger buyers of commercial property, their strategies haven't changed all that much. They're still targeting similar locations. They have become a little bit more risk averse, so they are being a little bit more careful in terms of what they're looking at investing. But the most interesting trend for Australia was that Sydney is now topping the list in Asia Pacific in terms of one of the preferred targets of these large-scale investors, and so much so that investors from the US now, 100% of them surveyed said that Sydney was their number one destination. So no shortage of capital, but the big issue, again, coming back to what was a key trend in 2020 was very low levels of leasing demand, and that applied not just to residential property but also commercial property and particularly the office and retail sectors.
Yeah, it's fascinating to watch and a very interesting year this year. Nerida Conisbee, thank you so much. Talk to you again this time next week.
Speak then.